In this video, I'll analyze the Q1 FY26 result and Concall of Aditya Vision. So let's start with the company overview. So Aditya Vision is an electronics retailer. They are mainly present in the tier 2, tier 3 cities of Bihar, UP and Jharkhand. They started their journey from Bihar and then they expanded towards Jharkhand and UP. Okay, so that is their geography. In total, they have 189 stores as of Q1 FY26. Most of them are in Bihar. About 100 stores are in Bihar, and then another 80-90 stores are in Jharkhand and UP. Okay, and they have 50% market share in Bihar in the electronics retailing. So that is another point. And if we look at UP and Bihar, the penetration of AC, TV, washing machine are lesser than the rest of the India. Okay, so that is another point, and that is why they have a very good growth opportunity in this kind of a geography. And if we compare Aditya Vision to Electronics Mart is the main peer of Aditya Vision. So if we compare them in terms of the store number and the store expansion number, then both companies are neck to neck in this parameter. But if we talk about the growth in the revenue and other parameters, then Aditya Vision is far better than Electronics Mart. So that is a very good thing, and that is what tells us that Aditya Vision has a very good business model. Okay, so let's talk about their Q1 FY26 result. So in this quarter, they grew their revenue by 5.8%, which is a very good kind of a number. Now, why I am saying that? Because if you compare this year's summers to last year's summer, so if you compare these two, then obviously the last summer was very good, but this year's summer it has been, it was very bad. So the demand of AC was very high in the last year, but whereas in this year the demand of AC was very low. So that is why I am saying this is a very good number. Okay, in terms of the tailwind, because we have to look forward now, because what happened have happened. Okay, but if we look in the forward direction, then what are the tailwind the management is saying? One tailwind the management is saying that the Bihar government has announced 125 units of free electricity, and so it would encourage the people of Bihar to buy more electronic goods. Okay, that is the number one tailwind. And number two tailwind is the monsoon. In this year we are having very good monsoon. The monsoon has been very good in this year. So in the Bihar and UP, we know that is more or less 50-60% are farmer. Okay, so because of the monsoon, the crop production is very good, has been very good in this year. So that is why the people will earn, the farmer family will earn more income, more money, and we know that when anyone earn more money, then the more or less a part of that comes to the discretionary product. Okay, so that is what can help them grow at a high pace in the coming quarters. So the management is expecting a similar kind of a growth as last year. In the last year they grew their revenue by 25% in the last 3 quarters. So we can expect a similar kind of 25-30% growth going forward in this year, except Q1. Okay, if we exclude Q1, then we can expect a 25% growth going forward in this year. So let's talk about the SSSG number. In this year they registered a SSSG of -4%, which is absolutely amazing. I mean, I am very, I if I say very frankly, then when Yashovardhan Singha said that their SSG number is at -4%, I was like, uh, how they did -4% SSG in this kind of a condition, because I was expecting a SSG of -10%. Okay, so -4% is really good, because if we look at SSG, what does SSG say? SSG mainly says you that the performance of the old stores. Okay, like if I take an example, then let's say in a store in the last year they did a revenue of 1000 crore. So -4% SSG means in this year in that store they did a revenue of 996 rupees. Okay, so that is what I am saying, and that is why I am very, I mean, amazed that how they able to hold on to the sales number as last year. Like in the last year, I mean, as I said, last year if the revenue was at 1000 rupees, then this year the revenue is at 996 rupees. So last year the demand of AC was very high, and this year the demand of AC is very low. So in spite of this kind of a condition, the 4% SSG number is a very good number. So that is the thing with SSG. And if we compare Aditya Vision SSG with Electronic Smart's SSG, Electronic Smart's SSG is at -18%. So as I said also, that I was expecting a SSG of -10% in Aditya Vision, and then -4% is amazing. So that is the point with SSG. In terms of inventory, last year at the end of Q1 FY25 they had around 380 crores of inventory, and this year the inventory is at 550 crore, which is kind of a okay type of inventory level. And the management is also saying the similar kind of thing, that we are not in a hurry to bring down the inventory level. We are in a very comfortable position in terms of the inventory. Why? Because if we look at their expansion plan, they are going to open 20 stores going forward in this year. So they can move the inventory from the older stores to newer stores, and that is how they can manage their inventory. And if we compare it in a real term also, like in the last year in Q1 FY25, if we compare the store count, they were at 150, okay, in terms of the store count, and now they have around 190 stores at the end of the Q1 FY26. So they opened around 40 stores. Okay, so the growth in store number is around 25%. So if we compare the inventory also, last year the inventory was at normal level at 380 crore. So if we increase the inventory 25%, okay, because of the store number of stores increased, if we increase the inventory by 25%, then it comes at a level of 470 crore. Okay, so the normal level is around 470 crore. That is one point. And then going forward they are going to open another 20 stores, which is around 10 to 11% growth in terms of the store count. So going forward, if we look at the inventory, the normal level is at 470, and if we increase 10% inventory because of the increase in store number, okay, then the inventory comes at a level of 520 crore at the end of the FY26. So the normal level of inventory should be at 520 crore by the end of FY26. and as of Q1 FY26 they have around 550 crores of inventory. Okay, and that is what the management is also saying, that we are in a very comfortable, we are sitting in a very comfortable inventory level. Okay, so that is the point, and that is the inventory point. So if we calculate, because obviously if the store number increases, inventory also increases. Okay, so that is what I am saying. If we calculate, then obviously we can see the inventory is more or less in a comfortable position. Yeah, obviously it is little higher, but it is okay, because business is not about a linear thing, it is a up and down thing always. So that is the thing in terms of the, and that is why, and that is why, because the inventory level is in a kind of comfortable position, they have a comfortable position in terms of inventory, that is why they are not providing the discounts. Okay, to their customers, and going forward also they are saying that we will not provide any kind of discount to our customer. So that is what helped them hold their gross margin, because if we look at the gross margin year on year, that is flat. Okay, year on year gross margin is flat. Main driver of the gross margin is the well management of inventory. They manage their inventory very well, and that is why they do not have to give the discount to their client. So that is the point, and that is the gross margin. Gross margin is flat year on year, so there is no issue about the gross margin. In terms of EBITDA margin also, that is flat year on year, mainly because of, as I said, there was no discount, and they managed their cost very well in the last quarter, because the management is also, like they said, that they know that the sales would be lower because of the summer, because of the weather, but what they can do is to lower the cost, and that is what they have done in the last quarter, and that is why the EBITDA margin also flat year on year. So that is a very good thing in terms of the margin also. Okay, and in terms of the PAT, in this quarter they grew their PAT by 4%, which is kind of a okay, because the revenue grew by 5%, so PAT grew by 4%, which is absolutely okay. There is no point talking about that. So that is the PAT number. In terms of the store expansion, in this quarter Q1 FY26 they opened 4 stores, and as of Q1 FY26 they have around 179 stores, and in the month of July they opened another 3 stores. So as of July they have around 182 stores, and going forward in this year they are holding their guidance of 20 to 25 stores in the whole year. So in terms of the store expansion there is no change in guidance or plan, so that is also a very good thing. And if I talk about the overall result, overall it is a very good result, I would say, because in a challenging condition, in a challenging quarter, they are holding to their one of the best quarter in their history. So that is really good, okay, in terms of a company, and that shows that how well their business model is, how good their business model is. And obviously as the quarter was very challenging, we can say that if they can execute their plans, if they can execute their business model, then we can have a very long run with this company, because now they are in the 3 states, Bihar, Jharkhand and UP, and they are expanding towards the central UP and then western UP, and then also by the end of FY26 they will expand in Chhattisgarh. So that is why I am saying this. So in terms of the whole result, it was very good, I would like to say. So no complaint about that. What happened in this quarter. It was expected that the result would be bad. That's okay. Let's see what happens in the next few quarters. So that's it for the video. Thanks for watching.